Well, hello, everyone. Excited about this session, CFO compensation insights from the F-Suite. If you haven't already heard of the F-Suite, it's one of the world's best organizations for CFOs coming together with this unique blend of in-person events, both national events and then regional, led by peers of yours, and then incredible Slack group. So the familiarity comes from the in-person events, and then the engagement and the helping each other out constantly on a repeated daily basis happens on the Slack channel. Kiran Lingam is the CEO and co-founder of the F-Suite. He and I have gotten to know each other over time because a number of our customers introduced me and told me about the event. And boy, have I become a fan, and I asked him to speak about it. And he wanted to pay it forward with everybody. And they ran this compensation survey, and it's really, really insightful. And I hope you get as much out of the this discussion, this survey, and Kiran as I have. Kiran, over to you.
Thanks, David, for that kind introduction. Thanks for having me. Really appreciate you and all that Sage does for this community, for the ecosystem. Events like these. I know our members and the rest of the community really appreciates that. So you guys are truly a force of nature. I see you everywhere. It's really awesome. So, so with that, I mean, as David mentioned, I'm a co-founder and CEO of the F-Suite. We are a tight-knit group of now over 900 CFOs, mostly from high-growth tech companies and venture funds, companies like Bumble, Circle, Fireblocks, Robinhood, Via, HubSpot, Lyft, many more. So as David mentioned, we have an online platform. It's actually not a Slack group. It is our own proprietary platform. Members collaborate in real time on whatever challenges they're facing that day. And then again, as David mentioned, and we partner with Sage on a lot of these. We do over 100 live events, in-person conferences, dinners, offsites. We actually have our senior executive offsite coming up next week in the Catskills. We've got 20 public and unicorn CFOs coming to hang out and learn about how to work with their C-suite peers. We've got our New York big conference at the New York Stock Exchange coming up in September. So always a good time. So we've got great events, we've got a robust platforms, but when it comes down to it, it's really about having that security blanket. So, I think we've all been in that place where your CEO comes to you or your boss pings you about something, you have no idea what to do or start, or a crisis like the SVB bank failure happens. Our members know they can turn to our community to get help, get feedback from the peers, be able to come back and act with confidence. So, that's sort of what it's all about. So today, I want to share some insights from our community on a topic that I think is near and dear to all of our hearts, which is how much should you be getting paid, and then how do you get it? Before we jump into the numbers, some quick background on me and why this topic particularly hits home. So flashback to 2013, Carta was still a 5-person company named eShares. Pave didn't exist. Certainly communities like the F-Suite didn't exist, and at least I wasn't invited to them. So after 8 years at a big company corporate job, I was trying to break into startups. Got to know a couple of founders at a young seed funded startup. They just raised $1 million. I had agreed to join as employee number 3, their first executive hire. And as part of that, I took a big pay cut. I sort of knowingly did that. I was really excited about the company and the break in, and the idea was really my salary would normalize, as the company grew, and we would all go off and have a big, success and exit. So, a couple of years go by, company's doing reasonably well. We've raised a Series A. Revenue is growing. We're hiring more people, but my salary was still the same. I was living in New York City, now with twins on the way. So, and of course, founders didn't raise my salary issue on their own. They've got their own fires to deal with. So, I did what probably many of you guys do is, I put together a nice presentation on all the great stuff that I had done for the company, the value I'd added, and then made the case for sort of a modest increase, in my salary to be able to pay the bills. But I didn't have any peer data. I didn't have any data. I didn't have any really any peers in a similar situation to talk to about it, and neither did our founders. So left shooting in the dark here. This really turned into like a laborious multi-week somewhat emotional, stressful conversation. And ultimately they gave me what I wanted, but some like damage had been done, right? So, I was left like, why was this so hard for them? Like, this should have been like an easy call for them. And they were probably like a little resentful that, I kind of forced their hand in the face of like, all the other, trade-offs and decisions and challenges that were on their plate. So, um, so ultimately, stuck around for a while, but left that company a little while later, and together with my co-founder started what is now the F Suite, really based on the idea that you can't learn these startup executive jobs from your big company job or a book or a course. You can really only learn it by struggling through them and talking to others, going through it, the same issues at the same time. So compensation, that's definitely an important issue. But there's, 100 others. So, how do you continuously learn about hiring, leadership, exec relationships, regulatory developments, and like the constant string of things that come across our desk every day. So, so really that was the impetus for this, community and why, some of what I'll talk about sort of particularly hits home for me today, on this topic. So all of this leads to like sort of the first insight I want to share from our community. And all of this came from like two different surveys that we did with our community. One was sort of on the hard numbers, what is the base, bonus, equity. The second is sort of how do you use that to negotiate, use that to sort of make your case, and what are the tactics around that. So we'll start with some of the tactics. At the end, I'll show you guys a live feed of the numbers in our dashboard. So we'll get to that. So, but first insight, as with any negotiation, we want to keep the emotion out of it. One of our members, went so far as to say that, they had the explicit conversation with their CEO that upfront that, he wanted to talk about comp, but that it is totally non-emotional and non-urgent. And so sort of really like setting the stage and just getting it out there in advance, letting it sink in. So that's, one approach. I think the overwhelming consensus within our community is the best way to keep it non-emotional is to sort of come with the data. So use all available data sources. So if you come with the data, the numbers are the numbers, you're either above or below the median or the 75th percentile for whatever the peer set is, and you can make your case from there. It's much harder to get emotional in the face of numbers, and it becomes of a more objective business conversation. So, there are multiple data sources out there. Our survey, which is, really focused on just the CFO, there's PAVE, there's VCECS, there's a few others. I think the guidance is get all of them and then triangulate. So it's what, and I think, many of our members like having our data because it is a more independent source. So from our side of the table, as compared to, some of the other ones are put together for the benefit of the investors of the company. So again, having all the data, being able to triangulate, those different perspectives is really important. So the other sort of dynamic that comes into play here with using all available data is in your role as the CFO, in these conversations, there's an elephant in the room in that you are also privy to what all the other executives in your company make. So I think there are divergent opinions on how to play that. You can explicitly use the information.
Play it well.
Yeah. But is that necessary? The CEO knows so can you use that more subtly? And this may be one of those things that's like case by case call, depending on like the personality of your CEO and or who the other execs are that you're comparing yourself to, and maybe the relative perceived performance. So I think uniquely to the CFO, this does creep into the dynamic, and you can sort of determine how to play it in your scenario. But it is, I think, in these conversations that we have, there are two camps in like how to play that, and often it is fact specific, but go into it with maybe a strategy on how you want to play it. So again, it's best to get all the data you can, all the sources. And then obviously there's a natural tendency to utilize the ones that best support your case. So, we have seen that those who use our data, have been very, very successful in obtaining comp increases. So, again, get all the data. So, but having the pure data is not enough on its own. So, the advice from our community is to combine that with your compelling value narrative. So, what are the key accomplishments and milestones that you've achieved, that you in particular have contributed to the company? Ideally, unique value that you've added over like a replacement level CFO. So, you may have implemented an ERP, right? You may have, picked any number of other software tools. But why did you make the right call to pick Sage, for example? Or why did you, what did you do that, somebody else wouldn't have done? So, what is your unique incremental value add? And that I find has really resonated with, CEOs. So, some other examples, I would say, you brought a key relationship into a fundraise, key hires, team development, key investment decisions you made. You worked with sales or you worked with marketing to invest in a particular channel and it really like paid off. Cultural impact, that can be big. Anywhere where you are carrying weight so that the CEO doesn't, can particularly resonate. So you expanded your scope to take on people, HR, ops, legal, all of those things. I think, what is your, unique value story? So, if you combine that with the data, then you're like, okay, now I should be at the 75th percentile. I'm not the median CFO. And then we even have one of our members who successfully argued that he should be at the 90th percentile. So, we worked with him and our team went back and forth and we like got a very tailored data set for his peers, his company size, his industry and his location and his years experience, and we pulled the very relevant data set in the 90th percentile, and he was able to use that to get a great result. So that is something we do with our members. We'll sort of help you go back and forth and figure out the right data set. So so then once you have your peer data set and you have your compelling narrative, so how and when do you initiate these conversations? So I think the third key component that is sometimes underutilized is timing. So you want to spend your bullets wisely. If you raise a comp conversation when the data will not support a significant increase, you've wasted a bullet, you've wasted an opportunity, and that will cost you. So most people will negotiate their comp when they first join the company and then maybe at annual performance time, but it's sort of the regular cadence. The savvy folks will take advantage of key catalysts that also correlate to higher comp in the data. So, these can be, the obvious ones. Maybe, you just completed your Series B fundraise or Series C fundraise. Series C CFOs make more than Series B CFOs, so that, can be a great time to do it. There's a, key acquisition, or key expansion in your role, like we talked about. So you're now expanding to cover HR, people, or legal, or ops. You're taking on the COO title as well. Those are great catalysts. We've also identified some key inflection points in our data that suggest that other times it would be beneficial to spark the conversation. So, for example, crossing the 200 employee mark for a SaaS company does show a step function increase in comp. So a smart CFO might wait until they cross that 200 employee threshold and then show up with our survey and make the case at that time. So, and this is different for different, like, fintech, that threshold is actually earlier. So you can make that case sooner. So, and then the other key timing issue that I think is you don't want to surprise anybody. So, showing up and like being very aggressive about, having a conversation in a short time span can sort of lead to that emotional result. So sort of telegraph it early. I think as we talked about, signal, not urgent, not not emotional, and let it sit. Let them know it's coming, and then it can sort of develop organically. But that that timing consideration is key, and you don't want to, put people on a defensive posture. So, putting it all together, keep emotion out of it, have all available data sources, crafting your compelling narrative, timing the conversation correctly to spend your bullets wisely. I think we have seen that this, assuming good performance by the company and the individual, overwhelmingly leads to like a successful outcome in negotiation. I think both in terms of the result as well as preserving your relationship with the CEO for the long term. So with that, I'll turn quickly to some other easy opportunities for wins. And so there are areas that are often easy yeses in your negotiation if you just ask, and they can lead to a huge differential. So first, guaranteed severance. So I think we find that the prevalence of this has definitely gone down in the current job market. You usually see this where you're being recruited out of another job, or you're being asked to leave a job and turn away, walk away from an accrued bonus, or as another enticement to leave the secure role that you're in and take the risk to jump. So for those who do get it, we do see 6-month median. I'm not sure if the slide is accurate, but the majority of people do get something, so it is worth taking a shot if you have leverage. Next, learning and development education budget. In my experience, CEOs generally like to hire executives who are curious, lifelong learners. So asking for an education budget at the offer stage, I don't think can hurt, and actually can be interpreted as a positive, and can be an easy yes at this stage. This is a sort of a tax advantage area, so often can be an easy yes. So next is executive coaching. So this is not as common, but this percentage at 20% has actually risen every year. I think 3 years ago it was like 12%. So this does seem to be in the upswing for where it's important. I think it's worth taking a shot here, and there's some data to back that up.
They make a difference.
Yeah. So then quickly turning to equity. So a quick caveat here: nothing here should be considered legal or financial advice, and you should consult your own advisors before taking any action. So acceleration of vesting. This is another one where it's just important to ask at the offer stage. A double trigger acceleration is usually an easy give, and it's much harder down the line when you get to a transaction. So this is one, just make the ask. It can pay off. Related to that, and continuing on the equity front, a pet issue of mine is to do everything possible to qualify for QSBS treatment, or at a minimum capital gains treatment on your equity. So particularly if you're in an early stage company where the 409 valuation is low and the assets of the company are under 50 million, it can be incredibly impactful. Either get actual shares of stock, instead of stock options. So the potential benefit here is up to $10 million, or 10x the value of the stock will be tax-free, both federal and for a lot of states. So potentially 50% tax savings if you qualify for QSBS. The simple transaction structure can double your equity value in terms of the real dollars in your bank account. It doesn't cost the company anything other than some administrative hassle and legal work. And so this can be an easy yes from the CEO. So I could spend probably 20 minutes on this issue alone. It is a pet issue of mine. If people want some materials on this, reach out to me. I'll send them to you. So just some other you guys can take a look at this. There's some other key perks that it's important to ask for. So just from my own experience, when you're often, as I did, if you're taking a lower salary or comp pending the next fundraise or some company milestones, get those adjustments to be automatic, get them in writing. That will save you from having to renegotiate this later like I did. And if it's not in writing, nobody else will bring it up. They won't remember on their own. If it's not documented, you'll be sort of starting at square one, anchored to your original deal. So get those in writing. So we do actually see quite a few true up deals, both equity and or cash comp related to particularly fundraising transactions. So that is somewhat common. You guys will see some other things on here, probably not surprising. Extended exercise window, indemnification agreement, remote work. Those are all, very, very common. So let me just time check here. So, so quickly, I think I'm getting short on time. So I will flip over and show you guys our live dashboard.
Just such great insights that you're providing for everybody. Just some great thoughts on how to negotiate and do it in a win-win with timing, with data, tied to value, giving them time to digest and understand, and some metrics to manage against. So they're not just on an island trying to sort it out, but that there's a baseline to do. And again, back to what the power of F-Suite, Kiran, this is just one of the many, many things that that you provide. But I hope everyone's really getting some really insight out of this.
Great. So can you guys see my screen? Can you see my screen, David? Or
We did a moment ago, just left.
So I'm going to pull up our comp
Great.
analyst here. So, this is this is our live dashboard. We have this live dashboard, plus we have a PDF report that can walk through each variable in slides, and you can bring that to your negotiation, and that's usually effective. But here, the cool thing is it's a multi-variable search. So you can go through and say, oh, here's my revenue comps, here's title, location, company stage, employees, and you can sort by multiple different variables at one time and get the median comp for that very specific data set. So we'll see all results from last year. The median base was 300, 25th to 75th range was 250 to 350, median bonus 23%, median equities 0.8%, and median equity value about 1.8. So, a couple of things to highlight here is year over year, we see, roughly, somewhere between 15 and 40K increase in the median base, highly dependent on what the market did. So last year, the median base was 285, but the year before it had jumped, quite significantly more than that. So, and these things are offsetting somewhat. There's, at least in the last year, there was some, offsetting effects of inflation, adjustments versus sort of the, cooler job market. This year is probably the opposite, where we have, less inflation, but the job market is definitely picking up. I would say the biggest variables that drive impact here are company size. As I mentioned, there are several catalysts that correlate to company size, and title makes a huge difference. So if you are sitting on the head of finance or VP finance title and you're the most senior exec, pushing for that CFO title, even if you have to give up some other stuff in the short term, can really pay off and also sort of protect you from getting layered. So pay attention to title in these negotiations and maybe give a little there. So I know I'm out of time, so I will say for the CFOs out there, I'd love to invite you to visit our website, fsuite.co, consider applying for membership. We'd love to hear from you. And with that, I will turn it over back to David.
Just folks, I hope you saw what I saw. Kiran's been in your shoes and created a group to help everybody out. And then this is just one example of the power, which I wanted to make sure all of you saw and shared, and help you both in your careers, and then also, again, with your compensation, with the wealth creation you're doing for yourself and your families. With that, we'll wrap up the session. Kiran, any final thoughts?
No, thanks so much for having me. And again, really appreciate what you and Sage do for the community. Really, really awesome.
We all win together. Thank you, Kiran. Thank you, everybody. We'll see you on the next session.